Well, top of the morning to you. Today and basically all this week, all we're going to hear about is the Fed. Why? Well, because the Federal Reserve is meeting in 1 day, 23 hours, 50 minutes, and 49 seconds. And that can be proven right through here if you go to the CME group. But we're going to talk about this here in a minute. But when I was contemplating doing today's video, there's really no economic data coming out today or kind of tomorrow. But on Wednesday, the Federal Reserve is going to announce what they're going to do. So that's what we're going to talk about here briefly. But I want to give you guys some input. Recently, last week, I did a video and I was going over what the Dallas Fed president, or the former Dallas Fed president, actually said. He was in an interview again today on CNBC. And it basically backs up everything I've been saying. There's way too much money in the economy. That stimulus is creating inflation, and it's coming down. But at what pace is it going to come down? But let's go to an interview. And I don't like doing this because I don't want to take up a bunch of your time. But let me go over the video or the interview with this young man. And it was just today. It was on CNBC today. And again, it's the former Fed president of the Dallas Fed. So he now can kind of speak and really give the truth of what's out there. So let's get over this. Watch this video. And I'm going to chime in every once in a while with some content, but let's see what he says about all the stimulus packages out there, especially the inflation, the anti-inflation bill that passed with trillions of dollars in it. So without listening to me, let's get over this.
More about this week's Fed decision is Robert Kaplan, former president of the Dallas Fed. He's co-chair
Love this guy.
Of Draper Richard Kaplan Foundation. What's bothered me for a while, Robert, is knowing that the Fed's tool is just sort of not the greatest way to try to control inflation, because it goes against what we want, which is a strong economy and low unemployment. If I was convinced that inflation was coming down, I wouldn't hike anymore. So this must be all about inflation. I just don't want to think that the Fed sees strong employment and strong economic numbers and says we have more work to do just because we haven't really affected what we were trying to do all along, which was to slow the economy. That's no good reason to keep going. So they must be convinced that core is still too hot and staying too hot.
Here comes.
The core measures are still too high. There's a reason for that, I think. In that if it were not for the remaining ARPA money that hasn't been spent, money from the Inflation Reduction Act, which is substantial in terms of manufacturing projects all over the country, the Infrastructure Act leading to new projects, I think the Fed would be done.
Wait a minute.
Fed
the Inflation Reduction Act is causing inflation?
In the long run, it will help inflation. In the short run, it is increasing.
Unbelievably inflationary.
It's increasing demand for goods, services, and workers. And my own view is that likely be done now. The economy would be weaker. But what you're seeing is anything interest rate sensitive is very weak. Goods are very weak, disinflationary. The service sector is resilient. The consumer is resilient. And I think the X factor in all this is the government spending that is still helping to prop up the service sector. And it means inflation is likely to be sticky.
We're going to spend this money over a period of years. So we're going to have this problem for years?
Listen how much.
So the White House has put out a map of the new manufacturing projects and infrastructure projects across the nation. And you're seeing 30 or 40 projects spread across the country, each usually the largest infrastructure project in the history of the state. The $12 billion tunnel project here that was just announced. And in addition, there's still X hundred billion of unspent ARPA money that went through the budget deficit 2 years ago. And I can tell you,
X hundred billions. So there's still billions and billions and billions to be spent. And the federal government knows this. The Federal Reserve knows this. So what are they doing about it? Well, it still baffles me how inflation has come down from 9% to about 3.25% what we're seeing right now. And then once the shelter numbers hit these numbers, we're going to be back in the 2% range. And we have hundreds, and like the gentleman said, hundreds of billions of dollars still to be spent out there. And that's what's reviving this economy. If it wasn't for this, you would basically have a dismal economy. But there's so much money being pumped into it, the consumer still feels like, wait, hey, I got money. And there's still states, like he was saying, there's states that we went over the top 10 states that were getting a lot of this money. I went over a video with it last week. I'll try to post that right up in here again. But these are states getting billions of dollars to create, or rebuild their infrastructure. You don't just throw money at it. You need manpower or people power to build this stuff. So when you have that much, construction going on, you're going to need the services sector. So you're going to need housing, services, leisure. You're going to need blue collar, white collar workers. You're going to need all kind of workers out there. So you're not going to see a crash of the employment numbers because the government is still spending trillions of dollars out there, kind of trying to still stimulate a big portion of our economy. So that's basically what's going on. And I thought I'd share that with you in a nutshell. So based on this information that we have today, kind of what's going on with mortgage rates. Well, what I follow here on my channel every day is the MBSs. Why? Well, because it's a mortgage-backed security that trades on Wall Street that lets us give basically precursor of what's coming. So right now we see the bond market or the price of the mortgage-backed securities down 17 ticks. All you need to know is there's an inverse relationship with that price and yields. So this means the downwise means if the price is down, rates are going up. Are they going to go up a lot? No, this might equate out to 0.03 or something like that. So really nothing really to write home about there. Here, let me go over the data that we have for today. So the CME is coming out and they're saying, is the Federal Reserve going to raise rates at the next meeting? And this is basically the tool. What's the likelihood the Federal Reserve is going to raise rates? Well, it should be at 100%. Well, it's 98.9. So there is a slight chance that rates might not go up, but that's what we're seeing right in there. And then the headline news all over CNBC and all over the financial markets is basically a momentous week ahead as the Fed, ECB, and the banks, central banks in Japan do things with their interest rates. Now, you think our economy is kind of dismal. ECB is the European Central Banks, that's in Europe, and then we have the Bank of Japan. These places, they're in more dismal shape than we are. So it's a big week for basically the federal governments and the feds and everything else throughout the economies, throughout the whole world. Economic calendar, basically today is nothing, tomorrow is basically nothing, and then on Wednesday, the Federal Reserve is going to come out and tell us what exactly they did, and what we want to pay attention to is what is their future guidance. Okay, so that is it for today, guys. So if you're out there and you're like, hey Dan, what do you really do? Well, I'm actually a mortgage advisor. I'm licensed in all 50 states as well as Puerto Rico. We would love to help you if you're looking to get maybe pre-qualified to buy that first house, or maybe be pre-qualified to buy that first investment property. Maybe you have a ton of debt and you have a ton of equity in your house and you're like, Dan, how do I get to it? These are all the questions that we can help you or guide you through. So if you're in need of a mortgage of any sort, or just questions about it, can you qualify? How much money do you make? Do I have enough money for the down payment? Is my credit score is good enough? Don't disqualify yourself. Please reach out to me or my team, one of my teammates, to help you navigate this daunting task. So best way to reach us is 844-775-5626, or just click the Apply Now button. It's right here, the Apply Now, not the short app. We need the Apply Now button. Just click that, answer a few questions in there, and then within 24 hours, me or one of my mortgage consultants will be getting you on the phone, or at least texting or emailing you to answer any questions you have and get you on your path to whatever you're looking to do. So thank you so much for watching, guys. God bless. Have a fantastic day, and I'll see you tomorrow. Bye-bye.